let's dive in. Today we're looking at Ethiopia's economic landscape. And we've got a pretty diverse set of sources, like news articles, financial reports, even a proposed government directive.
Sounds like a real mix.
Yeah, kind of all over the place, honestly. But that's what makes these deep dives so interesting, right?
Absolutely. Uncovering those hidden connections.
Exactly. And I'm glad we've got you here to help us untangle it all. Where do we even begin?
Well, one thing that really struck me was this push and pull in Ethiopia's economy.
Push and pull?
Yeah, like this drive for financial independence, but also this reliance on global trade and investment.
I see that. It's like wanting to have your cake and eat it too, kind of.
Sort of. It's a balancing act for sure.
And a great example of that is the whole credit rating thing. The African Union is starting its own agency, AFCRA. Seems like they're not too happy with how Moody's, Fitch, and S&P have been rating African economies.
It's a bold move, for sure. It highlights the frustration many African leaders feel about what they see as a bias against them, the so-called African premium.
So is this AFCRA thing a real game changer? Can they actually challenge the big three?
That's the million-dollar question. Will investors see it as a legitimate alternative? Because at the end of the day, investor confidence is key.
Right, because credit ratings are basically a country's financial report card. They can really impact a country's ability to attract investment and fund development projects. Absolutely.
And that's where it gets even more interesting. There's this article comparing Japan's and India's ratings. Japan has a ton of debt, but they still get an A+ rating. But India, with a booming economy and way less debt, is stuck with a BBB. Makes you wonder.
It does make you wonder if there's some truth to this African premium idea. Like, are these ratings really objective, or is there something else going on?
It's a complex debate, for sure. There are arguments on both sides. But it's clear that African leaders feel like they're being held to a different standard, and AFCRA is their attempt to level the playing field.
It's like saying, hey, we're done playing by your rules, we're creating our own system.
In a way, yeah.
But speaking of playing by the rules, we've got this whole other story about AliExpress launching in Ethiopia. It's like this tidal wave of Chinese e-commerce is about to hit.
And that brings us back to that push and pull dynamic. On one hand, financial independence. On the other, the reality of globalization and the potential benefits and risks that come with it.
Right. Because while AliExpress might mean more choices and lower prices for consumers, it could be a real challenge for local businesses. Can they compete with a giant like AliExpress?
That's a legitimate concern. And then there are the regulatory questions. Currency swaps, payments in birr, the impact on Ethiopia's trade deficit with China, which is already pretty significant. Lots to consider.
So it's like this big picture view of Ethiopia trying to assert its financial independence while also figuring out how to deal with these global players like AliExpress. But let's get a little more specific for a second. We have Bunna Bank's financial report.
Yes, a very interesting report indeed. At first glance, things seem pretty good. Growing assets, deposits are up, expanding branches. But when you look closer, you see some potential red flags.
Like what? Are they expanding too quickly?
Possibly. Their loan-to-deposit ratio is quite high, suggesting they might be overextended. And their profitability isn't really keeping pace with that rapid growth. Earnings per share are actually declining.
Huh. So, is this just internal factors, or are there external pressures too?
It's likely a combination. The report itself mentions some key factors, including the challenging macroeconomic environment in Ethiopia, high inflation, regulatory constraints on lending, and Bunna Bank relies heavily on interest income.
So they're vulnerable to rising deposit expenses. If they have to pay more to attract deposits, but lending is restricted, that's going to squeeze their profit margins.
Exactly. It's a tricky situation.
So we've got this big picture of Ethiopia trying to chart its own course in the global economy. And we've zoomed in on Bunna Bank as a specific example of how these larger forces can play out on a smaller scale. But what I'm really curious about is how these themes connect to some of these other seemingly unrelated stories. Like, why are egg prices skyrocketing if production has increased so much? It doesn't make sense.
And that's the beauty of these deep dives. Sometimes the most unexpected stories can reveal the most fascinating insights into a country's economic landscape.
So you're telling me there's a link between credit ratings, AliExpress, and the price of eggs in Ethiopia. Now I'm really intrigued. Let's crack this one open.
Let's look at this egg situation. It really shows how complex economics can be, especially when you factor in things like government policies, global trends, and just basic supply and demand.
Yeah, it's confusing. More eggs, but higher prices. What gives?
Well, the cost of producing eggs has gone up. feed prices are a big factor, and those are influenced by global commodity prices, which have been pretty volatile lately.
So even with more eggs, if costs rise, farmers have to raise prices just to stay afloat.
Right. Plus, there's the impact of VAT. Like we discussed with cotton, VAT adds to the overall cost of production for lots of industries, including poultry.
Right, so it's getting more expensive to produce eggs, even if there are more of them.
Hey.
But didn't the government have that program, Yelamat Tirafit, to boost agricultural output?
They did, and in a way it worked a little too well. Led to a huge increase in egg production, which initially pushed prices down.
So cheaper eggs. Sounds good, but there's got to be a downside.
There is. Those low prices were great for consumers short term, but they hurt a lot of small and medium-sized poultry farmers. They just couldn't compete.
So some switched to chicken meat production, and others left the business altogether.
Exactly. So now you have fewer egg producers, which shrinks supply even if demand's still high, and that drives prices back up. It's an unintended consequence of a well-intentioned policy.
Classic economics. Trying to fix one thing messes up another.
It happens a lot, actually. Even when the goal is good, more production, affordability, you have to think about the ripple effect.
Okay, so eggs are a bit of a mess. Let's shift gears to this football club crisis. Is it just overspending, or is there something deeper going on?
It's more nuanced than just spending too much on players. It's a lack of planning, financial transparency, and often an over-reliance on government subsidies.
Sounds familiar. It's that short-term thinking versus long-term sustainability we keep seeing.
Exactly. And the Ethiopian Football Federation is trying to tackle this with its new club licensing policy. Stricter financial rules, more transparency, encouraging self-sufficiency.
So, changing the rules of the game.
Yeah, you could say that. If it works, it could have a ripple effect beyond football, showing that financial discipline, transparency, and long-term thinking are vital no matter what you're doing.
I'm seeing how these pieces fit together now, but we can't ignore the conflict. What's its impact on the economy?
It's devastating. Businesses struggle, supply chains are disrupted, and investors get nervous, understandably.
There was an article about a poultry farm in Dessie, completely shut down because of the fighting. It's sad to see that kind of loss.
It reminds us that a stable economy needs peace and security. Without that, it's tough to build anything.
So we've got all these challenges, both internal and external, policies, global forces, short-term versus long-term thinking. It's a lot. But one more thing before we move on. The cotton industry. What's up with that? All right, let's talk cotton. Another case of good intentions, bad results.
It seems that way. The government wanted to boost revenue, so they decided to introduce VAT on cotton.
Sounds reasonable enough, but it didn't work out that way.
Not quite. You see, adding VAT, while good for government coffers, made local cotton more expensive, and that made it harder for Ethiopian producers to compete with, well, cheaper imports.
So the policy meant to help them actually hurt them. Ironic, right?
Yeah, a bit. And the impact wasn't limited to just the cotton farmers. It rippled through the whole textile sector. The local manufacturers were suddenly dealing with higher raw material costs, but raising prices wasn't really an option with weak consumer demand.
Oh, they're stuck. And this whole VAT thing seems to contradict the government's push for import substitution, right?
It does highlight the challenge, right? Wanting to support domestic industries while also trying to generate revenue. Sometimes those goals clash, and it takes careful planning to anticipate the consequences, both the intended ones and the unintended ones.
It's like there's always a trade-off, isn't there?
Often, yes.
Well, we've covered a lot of ground in this deep dive. What's the biggest takeaway for our listeners? What should they keep in mind as they watch Ethiopia's economy develop?
I think the main point is that Ethiopia is at a crossroads. There's a lot of potential there, a young population, diverse resources, a government that's committed to economic growth. But there's some big challenges, too.
And we've talked about quite a few of them today.
We have. Everything from needing more financial discipline and transparency, like we saw with the football clubs, to navigating the impact of these global giants like AliExpress. Ethiopia's got a lot on its plate right now.
And we can't forget about the ongoing conflict, which is having a huge impact on the entire economy.
Absolutely. Peace and stability are so important for a thriving economy. It's fundamental.
So, what's next? What should we be watching for? What are the signs of progress?
Keep an eye on governance, institutional reforms, and whether they can create a more stable, predictable business environment. Those are key for long-term, sustainable growth. But there are reasons to be optimistic, too.
Really? What gives you hope?
Well, we're seeing some positive steps. The new rules for football clubs, the club licensing policy, it shows they're serious about financial accountability. And the government's putting resources into things like the Yelamat Tirafat program to boost agriculture. Those are good signs.
So it's about balancing the challenges with the potential, right?
Exactly. Ethiopia's story isn't over. Not by a long shot. There will be more challenges for sure. But if they plan carefully, focus on sustainable development, and are willing to learn from their mistakes, I think Ethiopia can reach its goal.
Well said. It sounds like we'll be revisiting the story in future deep dives.
Definitely. It's a story worth following.
It certainly is. And with that, I think it's time to wrap up this deep dive. Thanks for joining us today, everyone. We hope you enjoyed exploring Ethiopia's economic landscape with us.
It was a pleasure.
Stay curious, keep exploring, and we'll see you next time.